Not a bad day to be a bull. I know we said that a lot last week, but I'm going to say it again. I know Monday wiped us out, but you got to give credit where credit is due. Today was a great day to be a bull. If you are net long through this corrective phase, like I am, if you're unwilling to commit large amounts of capital to the short side because it's generally harder to short primary uptrends, today felt a lot better in your portfolio than the last few weeks. I know for sure mine did. Guys, my name is Hamilton. I'm here with the Trading Initiative. Let's talk through today's day, wrapping up May 2nd, 2024. Do we think that this is over? I'm not entirely sure yet. First things first, there was no video yesterday because we had our monthly charting session at the beginning of every month. All of the members of TTI come together for about an hour and a half, and we chart through about 100 different setups. We look at things like index ETFs, sector ETFs, industry ETFs. We look at positioning, market breadth, all of the different market intangibles and internals. We look at commodities and assets that we're trading. We also look at individual stock setups, trade ideas. We update stuff. Basically, we're putting together a big framework for the entire month, and we do that at the beginning of every month. If you'd like to attend the next one, join the newsletter. The description is in the About Me section below. It's free to sign up for the newsletter, and if you're interested in joining with us, I will send you the information via the newsletter. Let's go ahead and get started really quick. Do we think this drawdown is over? Not yet, but we're heading in the right direction. I know I said that last week as well. There is some constructive stuff going on underneath the surface here, and I think it would be important. It's important to highlight it. I don't think that it's over, though. Until we start hitting higher highs, until the RSI firmly breaks above the 50, I don't think the downside risk is over. But the two things that I've been saying for the last 2 weeks, and we went over this concept in a lot of depth in the last webinar that we put out 2 Thursdays ago. I encourage you to go watch that. Is the dollar breaking lower and bonds catching a bid, which is exactly what happened today. As a matter of fact, the dollar finally broke down below 105.5, which it's been consolidating in over the last 2 weeks. We're potentially heading down towards that 200-day moving average. Every time the dollar breaks down, the market tends to rally. There's an inverse correlation going back 2 years. Every time the dollar breaks down, the market tends to rally. We peaked here during that corrective phase last year. In late October, you can see the dollar started to sputter out in late October, and then it capitulated down till about the end of December. And if you were trading last year, you know that was a great time to be long. Since then, the dollar has rallied, specifically at the beginning of April, which is when the market started to really capitulate down. It was really hard to get long. Lots of big moves to the downside in semiconductors, etc. It's all based off of the dollar. What is the dollar doing? It's the king of the market right now. As of right now, at least over the last 2 weeks, we are breaking into new lows. If this continues to break down, I expect the market to rally. It's just that simple. The dollar controls everything. It's a specific setup that I look for: dollar down, market up. Let's extrapolate that out to bonds. Bonds should probably catch a bid in a market where equities are also going up. Bonds and the equity market are positively correlated now. So the dollar and equities inversely correlated. Bonds and equities positively correlated. We would expect bonds to stop going down in a market that wants to rally. And that's actually what we've been seeing over the last few weeks. Now remember, bottoms are a process, not an event. Bottoms are a process, not an event. If we look back at the corrective phase of last year from late July through October, bonds stopped going down, and it took them probably 2 or 3 weeks to start to catch a bid. But in that time, the market started to rally. Here we are again, going sideways, probably going to take a couple weeks if this is going to be the bottom before they start to catch a bid. But there are some secrets that we can look for, mainly divergence in momentum. Last year, there was a hidden bullish divergence here telling us that each new low, sellers were becoming exhausted into, and here we see it, the exact same thing right here. So I'm not saying that, hey, this is the absolute bottom. It's a process, not an event, but things are kind of going that way. We're starting to see the light at the end of the tunnel, I think. Now, Apple reports very shortly, currently up after hours. This is going to be an important earnings, not necessarily because it's Apple, but the reaction to earnings matter more than the earnings themselves. It's been a yo-yo this earnings season. We've had Google absolutely break out into new all-time highs, and we've had Meta capitulate close to 20%. It's a yo-yo. There's no real consistency here. And by the way, Google and Meta both blew earnings out. Coinbase just blew earnings out. There's no volume after hours, but we're slightly down. Coinbase with probably one of the most impressive earnings this season so far. Slightly down. So Apple's reaction is going to be incredibly important about whether or not this market is ready to be in bull mode. I think a lot is going to ride on this. The Fed came out yesterday, and although we're not trading based off of what the Fed says, they essentially told us that they were going to quicken up the easing of quantitative tightening. So in effect, they are introducing some quantitative easing. The market liked it. Bonds liked it. The dollar did not. Kind of a perfect scenario for the markets to rally. Does Apple take advantage of this opportunity, and do the indexes finally start breaking out? We did add a couple of positions today. Some light positions into some names that are breaking out into all-time highs. Shark Ninja is a stock that we bought a while ago. We're adding in on this. We like it. CAR is a position that we originally entered off of the 60 pivot. We got a pullback today. VLTO is another one that we bought back here at 84 that we're adding into here at the first profit target for the next run up. It's about 112. And then we took some profit on some of these Chinese names that we bought a few days ago that are up and over 100% today. So today was kind of an active day for us, actually. We'll see if this continues to move in our favor. We're still net long as a group, but our exposure limits are a lot lower. We don't know if this is the time to be adding a lot of capital. We are seeing some constructive breakouts, but we need to see follow through from an index standpoint, and we definitely need to see follow through on those RSIs. Once again, we want to see RSI above the 50, and as of right now, we're just not yet there yet. We'll see what happens in about a minute when Apple reports, but I'm hopping off before that. Good luck. Whenever you guys see this, I'll catch you tomorrow. If you like this type of content, please like and subscribe. Leave a comment below. And once again, I'll catch you tomorrow.